Nvidia just invested $2 billion in a company most people have never heard of. Google is in talks with them too. Amazon already works with them. So if every AI hyperscaler on Earth is quietly partnering with this company, then there must be a reason. By the end of this video, you're going to understand exactly what the company is, why Nvidia invested $2 billion in them, and whether I think it deserves a spot on the long-term investors watch list. If you're the kind of investor who likes finding great companies to invest in, then hit subscribe because I do 5 videos every week on this channel for long-term investors. The company I'm talking about today is called Marvell Technology. The ticker is MRVL, and they have a market cap of around $90 billion. Their stock is up 168% in just the last year. Essentially, they are a semiconductor company, but they don't make the chips the way Nvidia does. You see, Nvidia builds standard GPU chips and sells them to everyone. Marvell does something different. They work directly with giant tech companies to design custom chips built specifically for that one customer's needs. Think of Nvidia as selling a Ferrari off the lot. Marvell is the company that builds an engineered race car tailored to the specific track that you're racing on. Different model, different customers, but both incredibly valuable. Here's what's happening in the AI industry that most people don't understand. Every major tech company, Amazon, Google, Microsoft, Meta, is trying to reduce their dependency on Nvidia. They love Nvidia's chips, but they're getting charged enormous amounts for them. So they're starting to build their own custom chips designed for their own unique AI workflows. Those are more efficient and cheaper to run at scale, whilst being perfectly tuned for what they need. But they don't have the engineering teams to design these chips from scratch. So they hire Marvell, and Marvell becomes their chip design partner. And this is why Marvell already has 18 custom chip design wins in volume production. They're working with Amazon on Trianium workloads. They're in talks with Google on TPUs, and they're getting contracts from hyperscaler after hyperscaler. Their lifetime revenue pipeline from these deals is around $75 billion. Let me put that in perspective. That's more than the entire market cap of companies such as Paramount, CVS, Kraft Heinz, already locked in as a pipeline of future revenue. The Nvidia investment. Why did Nvidia invest $2 billion? This is the part that made Wall Street pay attention to Marvell. In March 2026, Nvidia directly invested $2 billion into Marvell. That's unusual because Nvidia doesn't typically invest into other chip companies. So why would they give $2 billion to a competitor? Because it's not really a competitor. Nvidia realized something important. If they try to serve every hyperscaler's needs themselves, they'll get spread too thin. So it's better to partner with the best custom silicon designer on earth and keep those clients within the Nvidia ecosystem. This deal also gives Marvell access to Nvidia's NVLink architecture, which is basically the highest speed connections that let AI chips talk to each other. So Marvell can now design custom chips to plug directly into Nvidia's data center infrastructure alongside Nvidia's own GPUs. It's a masterclass in business strategy. Rather than fight Marvell, buy into them and make their success your success. Robert Greene would call this use your enemies. Sun Tzu would call it supreme excellence consists of breaking the enemy's resistance without fighting. Either way, Marvell just got one of the most important strategic partnerships possible in the AI industry. And also, 2 days ago, news broke that Google is in talks with Marvell to co-develop 2 new AI chips. This is huge for 2 reasons. First, Google currently uses Marvell's main competitor Broadcom for their tensor processing units. If Marvell takes even a part of that business, it's a massive revenue boost. Second, this shows Google wants to diversify away from relying on a single custom chip partner. That's good for Marvell, and it signals to the Marvell's design capabilities are genuinely world-class, because Google only picks the best. When the news of this broke, Marvell's stock jumped 6% in a single session. And if a formal deal is announced, you can expect a significant move further up. The 5 filter test. Let's run Marvell through our 5 investment filter test. Leadership. The current CEO, Matt Murphy, has been at the helm of the company for years. He successfully pivoted the company from traditional storage chips into the AI custom silicon space. That's not easy. We'll give them a pass on this filter. Competitive moat. Very few companies can design custom advanced chips at the advanced 3nm and 5nm process levels. Broadcom is the main competitor. Marvell and Broadcom are basically a duopoly in this space. So that's a real moat to pass this filter test. Vision. Marvel's aggressively investing in the future of AI infrastructure. They're committed to the hyperscaler pivot, and it's paying off enormously. They get a strong pass on this filter. Shareholder friendly. They even pay a small dividend and have some buybacks. Not a strong shareholder return story, but not a negative. I would consider this a pass. Resilience. Marvel has been public since 2000. They survived the dot-com crash, the 2008 recession, the pandemic. They're still evolving and still standing. They get a pass here. So we've got some 5 clean passes. This should definitely go on the love list, watch list for your stocks to invest into. Now the honest part. Every great company usually has a price that's too high. Marvel's stock has tripled in the past year, from a 48 low to 146 today. That's extraordinary. But it doesn't mean that you're getting in early anymore. You're getting in after this thesis has already been proven. The forward price to earning ratios is around 40. For a fast-growing AI company, that's not outrageous, but it's not cheap either. Analysts' 12-month price targets range from 125 to 170, with an average around 125, which means that the average Wall Street analyst thinks the stock is slightly overvalued at the current price today of 146. But here's the bull case. If Marvel captures even 20 to 25% of the custom ACIC market, as Bloomberg projects, that's 23 to 29 billion in annual revenue just from this segment by the early 2030s. From where they are today, that would represent massive upside. Now the bear case. The story depends entirely on a handful of hyperscalers. If Google stops using them, if Amazon scales back, if hyperscalers decide to insource chip design, then Marvel's pipeline collapses. My honest take on this is I'm not buying Marvel today, but the long-term story is genuinely exciting. Custom AI silicon is real, growing, and Marvel is one of the few companies in the world that can actually deliver it at the highest levels. But the stock has already run up 168% in a year. Chasing after that kind of move usually ends badly. I'd rather wait for a healthy pullback. If it drops back to the 110 to 120 range, I think that's a much more attractive entry point. In the meantime, this goes on my watch list with a note about that price. Alongside the other AI infrastructure companies that I've talked about before, such as Bloom Energy, Fabrinet, Celestica Sterling, and so on. These are part of the AI gold rush. None of them are Nvidia, but Nvidia relies on them. And if you already own Marvel, don't sell it because of this video. The thesis is intact, just to consider when you add in at what price points. And again, if you don't own it, put it on the watch list, make a note of those price points, 110 to 120 that I mentioned, and start deploying a small position that you consider relevant to your portfolio. And remember to never let any single stock dominate your portfolio. If this was useful to you, please subscribe. I post at least 5 videos every week for long-term investors, and I'll see you in the next one.